Govind Shrikhande, MD at Shoppers Stop, is with us. And Govind, a bit subdued this quarter, especially if one looks at the margins leading to consolidated loss. What's the reason for the same, would you highlight?
So you have to read it in two parts. First is the subdued performance of the Shoppers Stop department store and the limited format, and then the second is Hypercity. So let me first tackle the department store format. And if you recollect our Q3 conversation, we grew like-to-like by 17%, but there was also a preponement of sale that happened from Q4 to Q3 in 1 week. So that 50 to 60 crore of impact of sale getting preponed was definitely there on the like-to-like growth for sure. Number two, there was one unpredictable event as usual in Q4. The Delhi odd even formula did impact Delhi sales very badly, and has had impact over the whole quarter as well. So that's where what you are seeing is a limited space. Sale impact definitely is impacting margin, but overall if you look at the limited space, sales has grown at 8%, like to like at 6%, EBITDA growth is still there at 2%, and PAT has been flat. So it has not been able to really pull up its weight like what happened in Q3. Hypercity, as I had told you, that starting Q1 of this financial year, we are seeing a completely new team on board. We are seeing a completely new focus on merchandising and assortment, including imported merchandise as well. So Q4 definitely is the same line, but good part about Q4 as far as Hypercity is concerned is food growth is back. And that is, I think, one of the best directions that we wanted to really look at. With food growth coming in, average selling price down, we are seeing sales growth at about 5% overall level, like to like at 2%. And I would say like to like sales per square feet growing at about 5%. But margin is down by 130 basis point because food is higher share and fashion hasn't really grown. And after a long period of time, we are at a store level EBITDA negative in this quarter, fundamentally also because of closure of one store of Jaipur in Hypercity. So looking at an overall perspective, I would say department store performed pretty okay. Hypercity continued to underperform even in this quarter, and we are pretty confident with all the steps that we are taking right now. We should see Hypercity coming back on track from Q2 onwards.
Now, can you also quantify the impact of the odd-even rule in Delhi, and given the fact that it's going to continue, how do you plan to tackle the same?
So two parts. So as I said, as far as Delhi city is concerned, a double-digit negative impact, which is pretty large. I can't quantify the number beyond that, but very, very big impact. Going ahead, I would say that we already know the impact and we are working on various ways and methods by which we can organize the customer to come into the store either to the taxi route or bus route, etc. So we are working on infrastructure creation so that the customers don't miss out on their shopping trip for sure.
Right. So which brands will lead LTL stores growth in the volumes?
So department store, which is the biggest format for us in any case, should drive the like-to-like growth at about 8% plus, and Hyper definitely we are targeting 8% plus LTL growth as well in the coming year. Beauty, the best part about Q4 was beauty grew by 20% like-to-like. So in spite of a slightly subdued market at an overall level, beauty continues to do well. So for us, the beauty formats of MAC, Clinic and all the Estee Lauder formats, they have done well, and they will also continue to drive the growth. But yes, the biggest growth in terms of percentage would come out of online.
How have your footfalls been this quarter?
So overall, if you look at the customer entry growth over the last, let's say 12 quarters or so, there is a degrowth trend that you can see at about 3 to 4% like-to-like level, and you can see it consistently. Prime factor definitely is on account of one would be competition coming up in the same catchment, but number two, definitely the customers I would say focus on also doing shopping online. Definitely it has impact on online has an impact on customer entry.
So you've ended FY16 with a standalone PAT close to halving. What is it that you're targeting for FY17 in terms of volume growth, turnover, as well as bottom line?
So LTL growth, as I mentioned, in both the formats, we are targeting 8% plus LTL growth. As far as bottom line is concerned, if you look at the limited business, we are targeting a 6% plus EBITDA, and in Hypercity, we are targeting a company EBITDA positive. So it's a substantial change you should see in the next 12 months period with the kind of effort that we are trying to put in right now, and we should start seeing those results coming in, as I mentioned, from Q2 onwards.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at @ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.